There's some challenging information out this week for anyone looking to buy a home.
Mortgage rates are on the rise just as housing availability is becoming more scarce. The average rate for a 30-year fixed rate mortgage rose to nearly 6.4% for the week ending April 20th. Now that's up from the previous week when it averaged 6.27%. Meanwhile, new listings of homes for sale were down 25% last month over the same time last year. Inventory is now 41% lower than it was in 2019 before the COVID pandemic.
So let's bring in Akin Oyedele. He is the deputy editor for investing at Insider. We love your last name, Akin. Makes us kind of want to sing a little bit there. We know that mortgage rates are stuck above 6% right now. What about housing prices? Are they high right now, too?
Housing prices, they definitely shot up, a couple of years ago when we had the frenzy just because mortgage rates were so low. But they are slowly starting to cool off in some markets. So it really, as with anything housing, it really depends on what market you're looking at. But there is some cooling off from that race higher that we saw sort of in the months shortly after the pandemic kicked in.
Akin, I remember talking to some New Jersey prospective home buyers about 6 months ago. They were having such a difficult time finding something within their budget that they could actually move into, and they were hoping to get out of their rental situation. Here we are. It doesn't seem to be any better. In fact, by some metrics, it looks worse for them. What is driving this lack of supply that we're seeing?
Right. So the main culprit is really the sharp increase in mortgage rates, and that's having two knock-on effects. The first is that it's slowed new home building because if builders aren't confident that there'll be demand for new homes because they know that buyers see these high mortgage rates and they're like, oh, let me just keep renting, then they're not building as much as the market needs them to. And of course, builders have also faced, rising costs on their materials, just like the cost of pretty much everything else that we buy because of inflation. So that's one thing. The other knock-on effect of high mortgage rates is that existing homeowners, so people who have locked in low mortgage rates years ago, they're just not willing to move right now because they know that they'd be giving up those rates for much higher rates. And so you have a situation where there isn't that much new home building, and then for existing homes, people are reluctant to move because they will be giving up rates that now look, super low in retrospect.
Yeah, and I'm just curious, does that mean that rental prices are going up as well? Because I imagine that the folks I spoke with are not able to find anything still at this point with these rates going up. So what does that do then for rental costs?
For rental costs, it varies from market to market, but we have seen rental costs move up just again because of the overall inflationary pressures that we've seen in the last year or year and a half or so. And so, inflation again, it's the boogeyman here. Everything's a little higher than it used to be just because the cost of living has gone up.
So Akin, let's deliver some good news here. What advice do you have for anyone trying to lock in the best rate right now?
So there are a couple of things you can do. The first is, to try and boost your credit score, because obviously lenders that's a big factor they're looking at when they consider what rate to give each individual buyer. So anything, even a 20-point boost to your credit score by paying off some credit card debt, for example, can help. Additionally, if you have extra cash, you can consider making a larger down payment because, again, that makes you a more attractive candidate for a lower rate loan. Another thing is to shop around. There are many smaller community banks, credit unions that offer really competitive rates, especially if the lender in question is someone, or rather the borrower in question is someone who's done business with them. So looking at these smaller institutions versus the big banks can help. And lastly, there are some more creative options in terms of mortgage rates that aren't necessarily the 30-year fixed rate that we're all familiar with. For example, an adjustable rate can get you a lower introductory rate versus fixed rate that stays sort of the same for the span of the mortgage. So there are some creative ways that you can creative options you can look into beyond the fixed 30-year.
All right, there are options available is the bottom line. Akin Oyedele, Akin, thank you so much.
Thanks for having me.